Hi everyone, Michael here, Michael from my sweet luck, the Dhandho Investor. If you have read this book, congratulations. If you haven't, please start reading it, and or else I can do the summaries for you, but it's still not gonna be enough. You have to read this book. It's fantastic. Okay, the Dhandho Investor. Now I'm at a summary of Chapter 7, Dhandho 102, Invest in Simple Businesses. Previously, we have covered the frameworks. Every single framework is giving you different aspects and strength to invest in business, and one of the framework is about investing in simple businesses. So this chapter will be covering giving you techniques and ways to figure out and calculate how to invest in simple business. What is the value of a business as well? I mean, not in depth, but to figure out the intrinsic value of a business. So let's get started. All right, what is the formula to determine the intrinsic formula? John Burr Williams defined it as intrinsic value of any business is determined by the cash inflows and outflows, discounted at an appropriate interest rate that can be expected to occur during the remaining life of the business. So in short, DCFs, discounted cash flows, are the ways to determine intrinsic value of a business. So, for an example, a gas station for sale at $500,000. After 10 years, it can be sold for $400,000. Free cash flow $100,000 a year. So for 10 years, you're going to get free cash flow for $100,000. And if you use discounted cash flow, the gas station will have an intrinsic value of $775,000. The gap between the intrinsic value and the purchase price is where the profit lies. So if you minus with $500,000, you're gonna get $75,000, $275,000 plus. So it's awesome. It's a very huge gap. So John Burr Williams' definition may be simple, but the calculation for it is not. So you can calculate DCF using any scientific calculators. There are plenty of formulas. You just have to use the right interest rate, and the interest rate that we used for this one is for 10%. The Dhandho way to deal with this is only invest in businesses that are simple. It has to be simple. If you have to use up Excel spreadsheets or plenty of formulas and this and that to calculate, that means it's not the right one. First of all, you got to understand the business, and next part is it has to be very, very simple to invest it. So if you can do that in your mind, awesome. That's awesome. The most potent way is to buy simple businesses with simple thesis for why you can win more and lose less. Awesome. All right, so this is the chart for the discounted cash flow DCF's analysis of the gas station. So it have been a 10% have been used, and at the end you can see it's 774,701. So it's a huge gap for the price that you're buying for $500,000. All right, so thanks a lot. Thank you. That's the end of the chapter. Do like, do follow, do leave a comment, and I wish you my sweet luck. See you on the next chapter.